Hey there, finance enthusiasts! Today we're talking about the world of real estate and exploring some fascinating trends that could impact your investment decisions. You see, while real estate has long been considered a stable investment, recent years have thrown some interesting curveballs into the mix. So, let's start our video with historical trends in real estate prices. For years, investing in real estate has been seen as a reliable path to financial security. Historically, home prices have steadily climbed, offering investors promising returns. But as they say, the past doesn't always predict the future. Before the 2008 financial meltdown, it seemed like real estate prices would just keep soaring. From the early 1960s to 2007, the average price of homes in the US enjoyed a smooth upward ride with only occasional dips. But then, everything changed with the housing bubble burst, sending shockwaves through the market. Post-crisis rebound and recent trends. In the aftermath of the financial crisis, the real estate market embarked on a journey of recovery marked by twists and turns. By around 2013, home prices managed to rebound, reminiscent of pre-crisis levels. However, subsequent years brought turbulence, with prices flattening in 2018 and experiencing slight declines in 2019. And then in 2020, the onset of a global pandemic added new challenges. Despite setbacks, the housing market demonstrated resilience, with home prices gradually climbing once again. Despite occasional bumps, the overall trajectory of real estate prices has been upward since the financial crisis, highlighting the enduring appeal and resilience of the real estate market. Factors affecting real estate prices. One significant reason why home prices have been soaring lately is the combination of historically low mortgage rates and a shortage of homes for sale. It's like the perfect storm. High demand and low supply driving prices through the roof. But then in 2022, things began to shift. The Federal Reserve took action, raising interest rates to combat rising inflation. Suddenly, borrowing money for homes became pricier, cooling down the housing market frenzy. This change in monetary policy had a noticeable ripple effect, causing prices to stabilize instead of continuing their meteoric rise. It's a reminder of how sensitive the real estate market can be to even minor economic adjustments. These fluctuations impact everyone differently, and it's essential to stay informed about how they might affect your own housing situation or investment plans. So, what's your take on these changes? Do you think they're reshaping the real estate landscape for the better, or do you have a different perspective? I'd love to hear your thoughts, so feel free to share them in the comment section below. Regional disparities and local market dynamics. It's vital to grasp that real estate operates on a local level, meaning prices can vary significantly from one region to another. While one area might be experiencing a housing boom, another could be seeing a downturn. Even within the same city, neighborhoods can have completely different trends. So while it's helpful to look at national and regional data, it's equally important to understand what's happening in your own backyard before diving into any investment decisions. After all, what's driving prices up in one place might not be the case elsewhere. By staying informed about your local market, you'll be better equipped to make informed choices about buying or selling property. Investment considerations and strategies. Now that we've taken a deep dive into the world of real estate prices, let's shift our focus to some important tips for investors. While buying a home has long been seen as a smart move, it's crucial to approach it thoughtfully and with a clear understanding of your financial objectives. Keep in mind that owning a home only pays off when you decide to sell it, so having a solid exit plan is key. Plus, it's essential to consider various factors like mortgage rates, economic conditions, and market trends when weighing your investment options. By staying informed and making strategic decisions, you can navigate the real estate market with confidence and increase your chances of success as an investor. Forecasting the future of real estate. Looking ahead to the future of the real estate market, it's always a bit of a guessing game, but experts have some insights to share. While predicting trends isn't an exact science, many believe that we might see a more moderate pace of growth in the years to come. Factors like higher interest rates and an increase in housing supply can help keep prices in check and prevent the market from getting too hot. However, it's important to remember that different regions will continue to have their own unique dynamics, so some areas may see stronger growth while others remain more stable. Timing your investment. So, should you dive into real estate investment right now? Well, it's a bit like trying to predict the weather. It depends. Some folks might see the current market as ripe for making a profit, while others might prefer to hang back and wait for a better opportunity. Ultimately, whether you should invest or not comes down to your own financial situation, how much risk you're comfortable with, and what you're aiming for in the long run. It's a decision that deserves some serious thought and weighing of your options. Mitigating risks in real estate investment. Certainly, every investment comes with its share of uncertainties, and real estate is no different. Whether it's the market taking unexpected turns or sudden repair bills cropping up, there's always something to watch out for. That's why it's smart to spread your investments across different types of assets, do your homework thoroughly, and be ready to adapt when things change. With a careful approach and a sharp eye on the market, you can lower the risks and boost your chances of success in the real estate game. It's all about playing it smart and staying on your toes. Identifying opportunities in the market. In the dynamic world of real estate, opportunities abound for savvy investors who know where to look. While the overarching trend may be upward, there are always hidden treasures waiting to be discovered. Whether it's a neighborhood poised for growth or a property with untapped potential, keeping a keen eye on the market is key. By staying connected with local experts, monitoring emerging trends, and thinking creatively, you can position yourself to seize opportunities as they arise. Remember, success in real estate often comes down to timing and vision. So, keep your ear to the ground and your eyes peeled for those golden opportunities that could turn into lucrative investments. With the right strategy and a bit of luck, you can unlock the door to a world of potential in the real estate market. In conclusion, the world of real estate investing is complex and dynamic, but with the right knowledge and strategy, it can be a rewarding endeavor. By understanding the factors that influence real estate prices, staying informed about market trends, and taking a disciplined approach to investing, you can navigate the ups and downs of the market with confidence. So whether you're a seasoned investor or just dipping your toes into the world of real estate, remember to approach each opportunity with caution and diligence. Alright folks, that's a wrap in our exploration of real estate prices and investment strategies. If you found this helpful, don't forget to give it a thumbs up and subscribe to our channel for more insights into personal finance and investment. And if you have any questions or topics you'd like us to cover in future videos, be sure to leave a comment below. Thanks for watching and happy investing!